Welcome to the 701 Finance subject. In this subject we explore the finance function within the organisation and in particular look at three strategic decisions based around finance. Firstly, we consider what we should invest in. Secondly, how we should finance these investments. And lastly, how we should manage the risk associated with our investments. So investment decisions are those decisions in which the organisation commits resources. We will look at the various methods of valuation which enable us to determine appropriate means of financing these investments. We also consider risk management and how we can manage our exposure to risk and unexpected changes in the value of investments. So the subject itself is comprised of 5 segments: valuation in finance, risk, financial securities, capital structure and international finance. In segment 1, we focus on the investments a company can make to support the production of goods and services that a company provides to customers. Underlying this is the concept of the time value of money and the methods we can use to value basic financial instruments and real capital budgeting. We also look at the strengths and weaknesses of the various methods of valuation. In segment 2, we examine the different types of financing, debt and equity, and the calculations we can use to determine appropriate discount rates to reflect levels of risk for those investments. This also includes looking at methods of estimating the required rates of return on alternative investments and how we can assess the strengths and weaknesses of the different techniques. In segment 3, we look at how to distinguish between the capital market and the market for real assets as it relates to the principles of market efficiency and value creation. Given that the objective of our investment projects is to add value to the organisation, this segment looks at a range of financing instruments and capital market efficiency. We will learn how to determine when to use different types of financial securities for financing those projects with positive net present value. In segment 4, we look at the financing decision and we touch on some of the factors which must be considered to reach a financing mix. We'll look at how to apply capital structure theory to enhance the value of the firm and its investments, as well as to appreciate the link between capital structure and the cost of capital. In addition, we also look at how to determine the value of a firm under different assumptions about the impact of dividend payments according to the different theories. In the last segment, we look at aspects of international finance which affect the global environment firms are increasingly exposed to. In particular, we look at exchange rates, interest rates and relationship between them. We also investigate theories around purchasing power and how exchange rates are determined. And lastly, we look at international capital budgeting role within the firm. So by the end of this subject, we'd expected you have a very good grounding in corporate finance and aspects of the finance within the firm. And I very much welcome you to the subject and look forward to interacting with you over the coming weeks.